All right, so moving on to step two of the cost production report uh, process. Step two says we're going to compute equivalent units of production. And so we've got some terminology here that we need to be kind of careful with. We've got a definition for whole units here, and it says whole units are the number of units in production during a period, whether completed or not. So when we talk about this, we are talking about our beginning inventory uh, that is in work in process at the beginning of the period, and we are also talking about all units that are started in the period. Okay, so what we do not mean here is that the units are fully completed. Now, when we talk about equivalent units of production here, it says are the portion of whole units that are complete with respect to either materials or conversion costs. Conversion costs being direct labor and factory overhead. Now, I would probably add to this that when we talk about equivalent units of production, we're including uh, basically two numbers. One, fully completed units are part of equivalent units of production, as well as units that are not fully complete. So we might say that let's just make the example really, really easy and pull up a calculator here right quick. And so let's just say that we were to have, um, let's say that we had 60,000 units that were absolutely complete, okay? And we also had 10,000 units that overall, with regard to materials and conversion costs, were 40% complete. We would say that we have 4,000 equivalent units of those 10,000, but we're going to add to that the 60,000 units that are fully complete. So this is not to be construed as the number of units that are not complete and what percentage they are. It's that plus it's also all of the units that are fully complete. So we're continuing with our example. It looks like they were making some ice cream. It says assume that we have a 1,000 gallon batch of ice cream at the company, but it's only 40% complete in the mixing process as of May the 31st. Thus, the batch is only 40% complete as to conversion costs such as power, uh, direct labor, these kinds of things. So it says in this case, the whole units and equivalent units of production are as follows. So looks like we've broken this down into two components, both materials and conversion. So the whole units are going to be 1,000 for each of these items. What we appear to have going on here is a situation where materials are added probably at the beginning of the process. Therefore, with regard to materials, we have 1,000 equivalent units. However, with regard to conversion costs, while we have 1,000 gallons of whole units, we only have 400 gallons of equivalent units. That's the 1,000 times the 40% complete. So it says here to compute equivalent units for materials, it is necessary to know how materials are added during the manufacturing process. This is an absolutely true statement. I will tell you that for an accounting 2 or beginning, sophomore level managerial accounting class, most of those questions, at least that I would give in those type classes, which is kind of how this video is structured, the materials are going to be added at the beginning of the process. So you're going to see a lot of examples where production is 100% complete as to materials. So with that information, we can compute equivalent units of production. And it's not an easy process, but recall we do have our groups 1, 2, and 3. So inventory and process on July the 1st was 5,000 units. Notice that it says percent materials added in July is 0%. And that's because the materials were added prior to July. Group 2 started and completed in July. We had 62,000. And so if we recall, we come up with a number here of 57,000. How did we get that? We were able to determine that, yes, we completed 62,000 of them, but it is assumed that any items in beginning inventory are going to be completed within the month. So we would merely take the 62,000 completed, subtract the 5,000 that were not started in the month of July to come up with our 57,000. Notice here, that because we're only talking about those items that were started and completed in July, and because we are assuming that materials are added at the beginning of the process, 100% of these 57,000, we have had the materials added to them because they're added at the beginning of the process. That's what we can kind of glean from this. Okay, transferred out to packaging to the packaging department in July is 62,000. And as you can see here, they put a line under 57,000 indicating it's these 5,000 units in beginning work in process plus the 57,000 that were started and completed during the period. And then finally, group 3, these are remember we had 65,000 gallons to account for as to materials. So if we transferred out 62,000 and we were responsible to account for 65,000 gallons of materials for the mixing process, then we can basically back into this inventory and process as of the end of the month, July 31st. That's 3,000. The 65,000 minus the 62,000 we transferred out. Notice also, again, because we're adding materials at the beginning of the process, these 3,000 items, while not complete, they are 100% complete as to materials cost. So basically what this slide shows is everything that we just looked at. We have our group 1, which is our beginning inventory. 100% of the materials were added back in June. We talked about that. That's why we showed 0% materials being added in the month of July. And these are going to be assumed to be completed, particularly in a process costing environment where we're making homogeneous goods. So these are going to be among, these 5,000 are going to be among those transferred to finished goods. Now we also started in the period 60,000. Let's see here. We had this information on another slide. So started in the period is the group 2 and 3. However, started and completed is just group 2, 57,000 gallons, both started and completed. 100% materials added in July. These are also complete as to conversion costs. And then finally, work in process. We have 3,000 units. They are 100% complete as to materials, all added in the month of July. So this is pretty basic. This is fairly simple. Whenever we're going to compute equivalent units of production, we do need to know how direct labor and factory overhead enter the manufacturing process. And for our purposes, we are going to always assume that it is done evenly throughout the process. In other words, we don't have, most of our examples are just going to give us a percentage that we are, as far as conversion costs, which are our direct labor and factory overhead, we're just going to be given a number. For example, ending inventory is probably going to be 100% complete as to materials. Ending work in process inventory is going to be 100% complete as to materials, and then 30%, 40%, 60% complete as to conversion cost. So whenever we say evenly throughout here, that's really kind of code for just simply saying that we don't have any oddball calculations that we have to consider. We're usually going to be given a number um, to multiply work in the number of units in work in process by. So in our example, it was 3,000. Maybe those are 40% complete as to conversion cost. We already know they're 100% complete as to materials. So this slide breaks it down far, far better. I want to jump right down here to the bottom, and it says 59,250 total equivalent units of conversion costs in July. All right, so now we have a lot more numbers on the slide that we need to consider. So let's look up here at group 1, 5,000 gallons in beginning inventory. Now, we already know that materials are added at the beginning of the process, but notice that of this beginning inventory, 3,500 of these were equivalent units in the period before, because they were 70% completed for conversion costs back in the month of June. And if we bring our calculator over here, we can say, okay, 5,000 times 70% is equal to 3,500 equivalent units. Okay, so what that means is that they were 30% incomplete as to conversion costs, and that's where this 1,500 units are here. So we're going to take that 1,500 units, and these are going to be completed in the month of July. We're going to assume first in, first out. So these are the first units into the production process. They're going to be assumed to be completed. Group 2 is the easiest of all of them, right? Because these are the number of gallons that were started and completed during the month. We have 100% completion as to both materials and conversion. So we just take the full 57,000. And then if you recall, we also had 3,000 gallons in ending inventory. That's work in process inventory. But notice they're only 25% complete. So if we take this 3,000 gallons and we multiply that by 0.25, we do in fact come up with 750. Then if we add to that 750 the 57,000 units that were both started and completed in the period, as well as the 1,500 units that were partially completed at the beginning of the period, we add the 30% portion of conversion costs that were completed in the month of July to that, we do in fact come up with 59,250 total equivalent units of conversion costs in the month of July. So, just as I said in a previous video, there's going to be a percentage of those 3,000, 75% in fact, that are going to be conversion costs in the month of August. Okay, in the month of August. All right, I think this video is starting to get a little bit long, so we're going to close this one out and start another one.